My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey folks, welcome back. Have you ever heard all those multifamily guys and gals bashing people who invest in single family homes and saying, hey, that's not the way to go. You got to get into multifamily. That's the only way to scale. You've got the efficiencies of scale with multifamily, et cetera, et cetera, et cetera. Well, today's guest, Marco Pfeiffer, has a contrarian view to this. He's going to show us how he's actually gone from doing multifamily deals, and now his favorite thing to do is single family homes. So Marco, welcome to the show. Great to have you.
Great to be here. Appreciate the opportunity.
So give us a little overview of what your real estate investing in your portfolio looks like today as of the end of 2024.
As of 2024, I own a single family portfolio of about 50 rental properties, spread across Georgia, Florida, Mississippi, and Alabama. Most of my focus as of right now is in Mississippi and Alabama, where I still see opportunities for cash flowing properties, which is in general my number one driver focus in whatever I do is cash flow.
Okay.
Yeah. If
So
I find an
we were
opportunity,
talking a
there's
little
some
bit
cash
off
flow.
camera. We were talking a little bit off camera before we started that you used to be a multifamily guy and you switched over to single family. When did that happen and what kind of flipped the switch for you?
I was kind of mixed. I did single family all along from when I really started scaling up with 2016, got into multifamily in 17. So I was kind of in parallel.
Yeah.
In 2020, I owned about 160 apartment units, mostly all in a joint venture with one business partner. And at the time, we felt like with interest rates going up, the impact on cap rates, we felt like this was kind of the height of the market and decided to exit. Well, I exited. He stayed in some other properties, but the ones we owned together, I exited out of and kind of timed the market actually fairly well.
Nice.
So we sold between April and August of 2022. And then from then on was strictly single family. So I kind of abandoned the multifamily as of right now. I'm not saying I will never get back into it, but I just feel like there's a lot of noise in the market. There's a lot of um, friction, kind of where things are going, interest rates impact. There's a lot of distressed properties out there. So I kind of stay away from that and solely focus on single family as of right now.
So a lot of the arguments that multifamily guys have about doing those deals versus single family homes is, efficiencies, multiple units under one roof, one parking lot, et cetera, et cetera. And then also the valuation of multifamily properties tends to be based a lot more on net operating income, the profitability of the property versus comparables. So what is your take on that? And you know, how do you show people that single family homes are something that you can scale and make sense?
I mean, they're not wrong with what they're saying in terms of scaling up and the maintenance and whatsoever. Obviously, if you have one roof for 50 units versus one roof for a house, obviously there's scalability advantages. However, I kind of followed the Blackstone model, and I feel like Blackstone was the first one who really institutionalized single family investing. I mean, when they went to the market in 2010, 2011, they scaled up to 50,000 houses. Within a few years and exited in 2017, but then came back in, I think, 21 or something like that. So I followed that model where kind of like, I think that's where a lot of mom and pop investors kind of fail. They buy one property, they buy two properties, they try to do a lot of themselves. And kind of want to buy in their backyard because that's what they know. They can drive by and check it out and
Yeah.
whatsoever. So I kind of follow a little bit the Blackstone model of scaling up. And by scaling up, I just spread my risk. So one of my houses, if you have 50 houses, is not different than a 50 unit multifamily. If one of them is vacant or two is vacant, I'm not losing any sleep over it, you know. So
Right.
it's I think that the key is to scale up. Is the key is to get to a significant size, whatever 20, 25 houses, and then you can use that institutional mindset. Also the refinancing, freeing up cash, freeing up equity. So I follow a lot of that approach. Um, the part I like about single family, one of my favorite is the 30-year mortgage. That's one of my
Okay.
main, because
Yeah.
there's a lot of benefits to multifamily, but there's also benefits to single family, and one of them for me is the 30-year mortgage. You know, so I'm
Yeah.
tied in over long term on interest rates, but also have the flexibility. I can refinance at any time. So
So I've got a couple of questions for you, Marco.
mhm.
When it comes to the single family home portfolio, are you buying turnkey properties or are you getting into properties that you need to fix up to rent out? That's my first question. What kind of properties are you buying?
I'm buying rarely a turnkey. I have bought turnkeys, but I rarely. My main probably 80%, 85% of the house I buy need work. So I
Mhm.
follow the good old BRRRR strategy of buying, repairing, renovating, renting it, and refinancing it. So that's kind of my bread and butter. Where I find properties at a discount that need work, the other part of the whole game is you have to have a good network. So having a strong network of contractors allows me to take these properties on at a discount and get them fixed up fairly at a competitive price.
Well, yeah, that was another question I had for you. So how do you create this network of good contractors when you're working in so many different market areas that are far away from where you live?
Yeah. I mean, the main thing is being ingrained in that market. So for instance, I invest in South Alabama. I used to live in South Alabama.
Okay.
South Mississippi is right next door, so it's more or less one market. Um, and I have contractors going to Mississippi or vice versa.
Okay.
So living
So
there
you kind
helps
of buy you
build.
buy multiple properties around one
Yeah,
community for more
yeah.
efficiency. Is that what I'm
Coming back
hearing?
to the scaling back,
Yeah.
exactly. So yeah, so my two biggest portfolios is in the Mississippi, Alabama region, and the other one is in the Southwest Florida, Fort Myers, Naples region. And
Okay.
I try to stay with that. I have a few in Georgia, but I try to stay within those markets and just trying to scale up and build that scale. And by doing that, like I said, being ingrained, spending time there, talking to other investors, building a strong network with other investors, that helps me to build that. Finding good property managers. There's a few I self-manage, so I found ways to self-manage in a automate most of the property management process. So yeah, all these things kind of come together. It's not something you can start tomorrow. This is a process that takes years to build, but now it's kind of well-oiled machine, to be
Well,
honest.
that's was another question I had was the whole management side of things, especially with single family homes. That can be challenging to find good property management
Hmm.
with that.
Hmm.
Any tips or suggestions for people that are looking for managers who will do single family homes?
To be honest, for me, the biggest challenge is property manager. But that
Yeah.
was even in multifamily. That's not
Mhm.
different in multifamily as it is in single family. You know, it's you if nobody loves your property like you do. You
Of
know,
course.
so for a property manager that manages 500 units, 1,000 units, whatever 20 units you
Taking
have
care
or
of your
50
three
units.
houses is not super high
Well,
on their
yeah,
priority.
yeah,
Yeah.
it's nice. Yeah, thank you, appreciate the business, but it's not gonna be a priority for them if Joe calls and there's some issue with the roof or whatsoever, you know.
Yeah.
So it's a challenge. Property management is probably my biggest challenge in the whole process.
Do
But
you
again,
find it a lot more expensive, the management fees for single family homes versus the multis you've had in the past?
yeah, but it comes back to, yes, it is more expensive because you pay 10%, multi is usual. But as I scale up, I'm able to negotiate the rate on the property
Yeah.
management fees. So I usually pay 8%, because I give them a substantial amount of properties. So I'm able to negotiate some of the property management rates.
Yeah, that makes sense. The other question I had for you is, are there any challenges or compare and contrast the financing of single family homes the way you're doing it versus multifamily?
To be honest, I think single family is easier to finance than the
Really?
multifamily.
Okay.
It used to be fairly easy in multifamily until like 2022.
Yeah.
And I think nowadays a lot of banks got burned, a lot of lenders got burned, and the money is not flowing as easy as it used to.
Mm.
On the flip side, single family, I'm here actually at a conference right now, on a real estate conference, IMN, for institutional single family investors. So a lot of the guys here own 1,000 units, own 2,000 units, and there's a lot of lenders here. And just talking to a lot of lenders is
Okay.
they're literally begging for the business. So there's a lot of money flowing into single family from the institutional side, and also these institutions have lenders that they fund. So yeah, so the money is actually fairly easy available. Apparently, institutions like or start to love single family, so there's a lot of money flying into this space.
Yeah, it might be a little bit more liquid for them, I guess, depending
Yeah,
on the kind of property that
not
they're
more
pursuing.
liquid. I think it comes back to if you look at valuations, for instance, I mean, multifamily, mm, strong 16 to 22. I mean, went through the roof. Unfortunately, a lot of those valuations as cap rates went up, those valuations dropped. So in single family, yes, it's a downside we talked about earlier. The NOI, you can mention NOI, you push the valuation multifamily, but you also have a cap rate component that you not really can impact.
Yeah.
If the Fed raises interest rates, you can be the best operator and you can improve your net operating income by 5%. But if interest rates go up 50%, your
Yeah.
valuation is going to go down. So
Yeah.
it's just part of the thing. And I think what they like about single family is because you have two markets to exit. You can exit to an investor or you can exit to a retail buyer.
That's right.
So
You can
it's a
sell the whole
fairly
portfolio to somebody, or you can sell it off piece by piece.
yeah, and actually the institutions that they here, the ones that are selling, they do that actually one by one. We
Really?
would think they go out and they sell like 20 at the time. It's like no, they just go to the retail
List it with a
market and sell
realtor
them.
and sell it to mom
Yeah,
and pops. Well, they're
yeah,
going to get a better price for it, right? I would imagine.
exactly,
Yeah, that makes sense.
exactly. Yeah, yeah,
Speaking of that, Marco, so big picture strategy wise, I've spoken to some single family home investors where their goal is, yeah, they want to build up a fairly significant portfolio, but they kind of do it where they really focus on paying down debt fairly quickly. Now, you're talking about one of the big benefits is the 30-year amortization with single family
yeah,
homes. But I've spoken to other people that kind of like take all the cash flow from certain houses, pay off
yeah,
and just kind of knock them out and start getting a bunch of free and clear properties so their cash flow
yeah,
really
yeah.
kicks up. What's your philosophy around that?
I personally will never pay off a mortgage in my life. I
Yeah.
will refi until I die.
Yeah.
So
Tax free.
so it's that's the way to scale up.
Yeah.
Yes, these guys who pay off them, it's nothing wrong. I mean, I don't whatever works for whatever person with strategy. But the problem that they have is, I mean, they're going to be limited on cash in terms of scaling up.
Mhm.
While my cash is at work, I free up the equity, I take the equity, reinvest it, build more cash flow, expect my portfolio. If you're in a growth mode, if you want to scale up, I think the way to go is the financing, the refinancing. And there's also a component to it that a lot of people overlook. One of the reasons I like the 30 years, the inflation component. Okay, so if
What do you
my
mean?
mortgage, let's say I buy a house for $200,000, all in, I'm making up an example, $1,500. Okay, so now I'm cash flowing 500, and I rent it for $2,000. I'm simplifying here. I rent my cash flow is $500. That $1,500 mortgage, I mean, just the principal interest part is going to be $1,500 in 10 years from now. It's going to be $1,500 in 20 years from now.
Right.
That rent on that property is going to be in 10 years, I don't know, $2,800.
Yeah.
In 20 years might be $4,000. So you
Yeah.
have an inflation component that you're almost hedging against the US dollar if you take long-term debt. And
Mhm.
that's kind of how I look at it, is if I take long-term debt, I'm hedging against inflation, I'm hedging against the US dollar.
No, that makes a lot
Um,
of sense. Us Canadians are so jealous of you guys in the States because here, yes, we have 30-year amortizations, but you got maximum about a 5-year term, then
Five
you have to
year,
go and
yeah, yeah. I
oh,
know a lot
so
of
annoying.
investors in Canada and yeah. So I
They're going to the
understand how your
States. That's what
system.
they're doing. They're going to
Yeah,
buy to the
no,
States now.
exactly. They reach out to me for that reason, you know.
Yeah.
So yeah, that's one of the things I have to say. I'm from Germany originally. I'm very familiar with the real estate market, especially in Germany or in Europe. I know Canada real estate market. I've spent a lot of time in Mexico. I know that market very well. Have spent some time in Asia. But for me, by far the best real estate market in the world is the United States.
I think I
You
have
know,
to agree with you. Yeah.
it's
For that
just
kind of stuff.
the access to capital, you don't have that anywhere else. You know,
Yeah.
getting a getting a mortgage, you don't
10,
get anywhere else.
1031
And
exchanges, man. Yeah. Just there's so
1031
many things.
exchanges,
Yeah.
write-offs, all the depreciation. You have depreciation on those houses because like for instance in Germany, it's very hard to pay off a mortgage actually. There's actually
Mm.
penalties if you pay off a mortgage early. And so you don't have to. I can refinance at any time. I can take out a mortgage today, and for whatever reason the interest rates dropped 2% to
Yeah.
6 months from now. I'm going to refinance in 6 months. Or in, for instance, I have a portfolio of 10 properties have appreciated tremendously, but it's a 4% interest rate. You know,
Mm.
so I have a ton of equity in it, but I'm still not touching it as of right now because it would really hurt my cash flow. So I benefit from that low interest rates for a long time. You know, it will be
Yeah.
a long time before I see 4% again.
Yeah, for sure. So what are the plans for the new year, Marco? Where do you see you taking your portfolio in 2025?
I'm not overly aggressive. I'm just buying as opportunity arise. So right now I'm actually under contract on 3 houses. But I also have where I'm buying things for like 3 or 4 months. You know, so but my goal is to add 5 to 10 properties every year.
Nice.
That's
Yeah.
kind of where what my goal is. I was not as aggressive. Like I said, when I was in multifamily, I was focusing on multifamily. Also, when interest rates went up, so I took 2023. I didn't buy much, um, but I see better opportunities now. So obviously, the valuation is still a problem, so it's hard to find deals. But if I find them, I definitely
You're gonna take
execute.
advantage.
So for
Oh,
next year,
I
probably
was
not.
gonna ask you,
Yeah.
do you self-finance everything or do you work with partners? You work with investors? What do you do?
I'm by myself. I don't, like I said, when I was in multifamily, I was doing joint ventures 50/50, mostly like 40 unit type of
Mhm.
deal, which we could take down together. And as of single family, I'm a lone ranger.
Well, like,
Yeah, yeah,
it makes sense. I mean, especially once you get into this level, if you're able to refinance a few properties, that gets you that
mm,
money you need for down payments
yeah,
and repairs for 5 or 10. You're doing the
yeah,
burrs on them anyhow, so you're able
yeah.
to recycle your money on a fairly regular basis.
Yeah, I used to be a CFO in a previous life, and I just like the idea that I don't have to explain to anybody numbers, and I don't have to send out any reports on how the assets perform and whatsoever. So
Yeah,
I
I can
purposely
imagine that. You're glad to have that behind you.
like to stay by myself. There's nothing wrong with syndication, nothing wrong with a fund, and I might do a fund one day, but I kind of like the fact that I don't have to answer anybody about what I do, how I
Lean and
invest, and
mean.
where I invest.
No, Marco, if people want to connect with you and reach out, how should they do that?
LinkedIn. I'm very active on LinkedIn. Create a little bit of following on LinkedIn. So that's the best way. Marco Pfeiffer. I'm sure my name is somewhere in the
Yeah.
in the notes. Look me up. There's not that many Marco Pfeiffer on LinkedIn. Look me up and connect with me, please. And yeah, more than happy to discuss more or talk about more about real estate, especially single family.
Awesome. Thanks for being on the show, Marco.
Hey, great to be here. Appreciate it.
All right, everybody, take care. We'll see you on the next episode. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewyou.com. Now, at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.